Can do is actually bring your accounts current. Okay, now you can apply your tax refund to catch up on any overdue accounts or any missed payments. You can also take this time to try to consolidate this as well too. We'll touch on that as well, but you can bring accounts current, and obviously it's going to help you repair your payment history, which is a major credit score factor. That's the number one credit score factor. We can't go back in time and try to turn those late payments into on-time payments, but at least you could bring that balance down to make those payments more manageable, if not pay the whole thing off. Hello everyone, my name is Calvin Russell, CEO and founder of 850 Club Credit. Today we're going to be talking to you all about how you can use your tax refund to improve your credit score. Let's get right into it. So a lot of people don't know this, but did you know that your tax refund could be the key to boosting your credit score? Okay. Most people don't realize its hidden potential to reshape their financial future. All right. Now, are you ready to turn your refund into a credit score game changer? If you are, let's get started. So, number one is that you want to pay down your credit card debt. Okay. Now, this works for open and closed charge off accounts as well, which a lot of people don't know, which means that if your account is, let's say, for example, closed and that there is a balance, usually that's going to mean that the account was essentially charged off. Okay. A charge off is when an account is closed, you can no longer use it for like any new purchases, usually like credit cards typically. Okay. And the balance that's owed is essentially charged off. Now, this can turn into a collection, but there are some times in which the balance just sits there and never got sold to a collection company. And so essentially, that utilization and that percentage is still counted against you. Okay. So now, how can you benefit from that? Well, of course, all you got to do is just either make a payment arrangement or make some type of settlement. Okay. But a lower credit utilization ratio can significantly improve your credit score. Okay, guys. And then now, not only that, but some banks may be open to a settlement, but this may also close the account. What does that mean? That means, I'll give you an example. Let's say that you owe about $1,000 on a credit card, okay? And that's the amount that was charged off, is closed, whatever. And let's just say the limit was $1,000. So in this case, it's 100% maxed out. Okay. Now, typically you're probably thinking, well, I'll just go and just pay the $1,000. But before you do that, you want to call the bank and see if they have some type of payment arrangement program. You'd be surprised. A lot of credit card companies have programs in which you can have a lower interest rate for a period of time. They may even let you settle it, which means that they will agree to a lower amount. So instead of you paying 1,000, they'll take like 500. They may even take less than that or something like that. But again, you just have to show them that you are interested in actually paying that down or paying that off. Once you do that, and then of course the balance starts to decrease, or you pay it off, or however you want to do it. Either way, once you do that, the utilization percentage is treated just like it would be if the account was open or if the card was open. So once you do that, now the account is going to actually help you and improve your credit score. Next is going to be reporting rental payments. Now, a lot of people have heard about this, but they still haven't done it. Okay. Now, if you don't know, real quick, if you're looking for a way to lower your car payment with a soft pull, this means no effect on your credit score to see your interest rate in terms. If you decide to move forward, then they will do a hard pull, and they have competitive interest rates. And this is something that you can get an instant decision on right away. To learn more, scan the QR code or click the link in the description below. Now back to the video. Reporting rental payments to your credit report can help build or improve your credit score by showcasing a consistent payment history. This is especially beneficial for individuals with limited credit profiles or no credit card usage at all. Okay. Now, if you want to learn more about this, you can scan this QR code. But essentially, a long story short, you can add up to 24 previous months of rental history to your credit report. Okay. And then once you do that, of course, your credit score is going to improve. If you want to continue adding months of future like rental payments as you continue to pay, they have an option for that as well. Scan that QR code or click the link in the description below to learn more. Another thing that you can do too, now that you have that tax refund, is to start investing in accounts that's going to help you improve your credit score. For example, this is a $5 a month credit builder. Okay. Now, this has no effect on your credit score. It is a soft pull. it also has a 95% chance that you will be approved, as they really don't need anything. They just need to confirm that you are a real US citizen, okay? And then now another thing you can do too is that you can get this account multiple times when it's done, okay? So it usually has like a 12-month term, so you can pay $5 a month, 12 months, improve the score. At the end of the term, you can get that account again. A lot of times people just get this account one time. You can most definitely get this account as many times as you want, but you can only have one account like this open, okay? And again, that's $5 a month for 12 months. If you want to learn more about that or grab that account, scan that QR code or click the link in the description as well. Now, this account is pretty much the same thing. This is a $10 a month credit builder. Now, I got to say something. Just because you're spending more money per month does not mean that you're going to see more points, okay? This is just another option. Why am I showing you this? Because with the $5 account, you may not be approved, for example, or you may have had them in the past and you made a mistake with that account. Because of that, they deny you, okay? So again, with a situation like this is just another option. Can you get both? You most definitely can get both, okay? Now, this again has no effect on your credit score when you apply. So there's no hard pull, it's a soft pull. There's a 95% chance that you will be approved. They just need to confirm that you are a U.S. citizen with a social security number. Get this account multiple times. You most definitely can. And you're paying $10 a month for 12 months. Scan this QR code to learn more if you're interested. Another thing that you can invest in to improve your credit score, okay, is going to be reporting your utility bills as well as your subscription services to your credit report. Now, this is only one of the few companies that are out there allowing people to do so. But essentially, how it works is you can add subscriptions to your credit account using their list of 100 available subscription services, okay? And of course, they have all the major brands like Netflix, Hulu, Disney Plus, ESPN Plus, Spotify, Paramount, YouTube Premium, Uber Eats, DoorDash, and even your cell phone bill. Yes, your real quick, be sure to download our free ebook today. All you gotta do is scan this QR code right here or click the link in the description below. Now back to the video. Your cell phone bill can be added to your credit report, okay? Now, again, you wanna make sure that you've obviously paid these bills on time. On time meaning never 30 days late, okay? And as long as you've never been 30 days late, now I won't say never, but the payments that they're reporting to your credit report, and this is going to report to all three credit bureaus. So this is going to most definitely help you improve your credit score. If you want to learn more about that, scan the QR code to learn more or get started on that today. The next thing you can do is actually bring your accounts current, okay? Now, you can apply your tax refund to catch up on any overdue accounts or any missed payments. You can also take this time to try to consolidate this as well too. We'll touch on that as well. But you can bring accounts current, and obviously it's going to help you repair your payment history, which is a major credit score factor. That's the number one credit score factor. We can't go back in time and try to turn those late payments into on-time payments, but at least you could bring that balance down to make those payments more manageable, if not pay the whole thing off. Or you can also do a settlement as well too, but that may potentially close the account. Also, that's going to help you consistently stay current on payments moving forward, which of course will help you sustain your overall credit improvement. Next, this is going to put you in a position to use your tax refund to build an emergency fund, okay? This allows you to set aside a part of your tax refund as a safety net to avoid relying on credit for emergencies, okay? Also, it allows you to obviously have savings in place. It's going to help you stay financially stable and prevent you from having missed payments, because if you have a payment coming up, you don't have to worry about where the money is going to be. All you know for a fact that it's already sitting in your savings as well too. This is also a proactive step that's going to protect your credit score and your overall financial health as well. Another thing that you could do too is consider getting a secured credit card, okay? Now again, a lot of people are in different situations. I only recommend a secure credit card if your credit score is like under 580, under 550. If you're over 580, over 600, you do have options in which is not going to be secured, okay? But either way, if you don't have credit or you need to rebuild it, use your refund to open a secured credit card. Okay, make small regular purchases and pay off the balance monthly to establish a positive payment history. And here's one of my cheat codes to this. Okay, you can consider getting a subscription service that you already have and change the payment method to the credit card, of course, and then turn on auto pay. So let's say, for example, and I always recommend this because it's going to solve two things. One, technically, it's going to solve three things. One, you're not looking for a new bill to use your credit card for. You're not saying, "Oh, I'm gonna get gas, I'm gonna get groceries." We know that you're gonna do that, but with the price of gas and groceries, that could be well over hundreds of dollars, by the end of the month. Versus if you have like you just put it on your Netflix, your Apple Music, your Hulu, your Spotify, something that's small, right? You put that on there, so you're not looking for something. Number two is that it's something that is affordable because again, it's under $50, it's under $100 a month. Okay. And number three, you don't have to worry about whether you're going to have the money for it or not because it's already a low amount. We're talking $20, $30. So you could put that on auto pay. And again, that's going to put you in a very good position to help you improve your credit score. Thanks for watching, and we'll see you guys on the next video.